Good morning, and everybody. Welcome to the Morning Volatility Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to the Morning Vol Report. Take a look at our Saturday class as soon as I can open this up, right? Best chance for trading weekly options. Look at our course. Actually, this is our best attended course so far that we've given for a Saturday. I'll be talking about time spreads, looking at term structure. Mark will be talking about shorter term butterflies, managing the trade short term, why weeklies perform a certain way different from a monthly or farther out option. So giving you an idea of what makes the weeklies an interesting trade. And with all of our Saturday classes, if you buy a Saturday class and become a gold member, send me a note at andrew@optionpit.com and I'll credit you the Saturday class to your gold for your gold membership. Gold entitles you to all kinds of stuff, but it mostly gives you everything in our store, right? So you're going to learn a lot about trading options, about trading VIX, the vol products, managing risk. A lot of the stuff that it's very hard to find or get out of books, I think we do a pretty good job of explaining that. And with that, what do we have? Well, this is something we're going to look at in the chat today. A stock that seems like it doesn't want to go down after having a very rocky history. And funny, just as we were starting today, one of the guys in my chat where he's like, well, VIX is not going up. So let me see here. We get a chart. Hopefully we'll get this. All right. Yeah, okay, you're getting a little lift off of from a very low level. I mean, it's only 2, 4, 5. It's not very much. Let's put it that way. It is slightly higher than it was a couple days ago. It is a little higher today, the vol of all. Nothing like, obviously, it was into the Brexit. Nothing like it was. I guess this was the Brexit area. Sorry, this was just actually last week when it pitched right before the last Yellen minutes. So just taking a look at this, it's giving you an idea of, where vol can go and how fast it can move if the market gets nervous. Right now, there just isn't a lot of catalyst for anything. So the fact that, there could be something, the Fed, all these Fed announcements have always been a big catalyst for movement, and we could actually see that again. So it's normal for everything to catch, all the volatility to catch a slight bid, for the vol products to catch a slight bid going into it with, I don't know, probably the most dovish Fed chairman we've had so far. And what that's giving us is, just not a lot of activity. Last thing was of all. I'll look in the pit report in the chat now. I can tell you where it is. Low. It says, where is the vol in Apple? Low. Low, 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 low. Right. I don't know. Has Apple moved anywhere in the last... but we'll cover that in the chat, Mal, okay? All right. Anyway, expect anything from stocks lately. We're looking at owning long-term October volatility in VIX. That's a possibility because, again, vol is still very low out there. The October future is still trading $17, so it's not as crazy as it's been. But the real move could be, again, probably VIX options, VIX puts, because if the Fed news is nothing, right? Where's VIX going again? It's going to be back to 11.5 right here. So when I look at this, I don't think it's as much of a vol product play. is that it's really a VIX play, because the real movement we've had lately has been in VIX. We get a little lift and then back down, and we keep wanting to be pulled down to this, mid 11 range after whatever the Fed announcements are, which I think that if you're looking for a short vol play, even into next week, the 13.5 puts for 40 cents. Those could easily double. The 13 puts for 20 cents. They could easily double. Okay, so they have a lot of explosive potential. You might buy, let's say, a VIX call. You could buy a call spread or something like that if you wanted to hedge, or even buy a longer term call spread to hedge those puts. But the real trade lately has been just the very kind of real bouncy nature we've had with VIX between, let's say, 11.5 and 13.5. Right? Again, because realized vol is so low overall, it's very easy for the VIX to pull down again. Now, this is probably going to be this August cycle, really, realistically, will be the last place, because now volatility is, remember, VIX is looking a month forward, so we're out here to September 23rd at the end of the quarter. Again, if we don't get any action out of tomorrow, this stuff is going to be dead. You can expect at least a 1-point drop in vol across the term structure, and you start seeing 11, possibly 10.5 for sigmas out here in the SPY. So if you're looking for something with some explosive potential, those little puts in VIX could do the trick for next week. A little bit we can look, D. But that's at least just looking at the broader market, that's what we have. Without one of the things that it seems like it's happening is all this central bank intervention has just totally put the dampening on vol. And the last time I saw vol really this low or acting this low has been a decade ago, when the Fed they crushed interest rates that allow funds to borrow money cheaply and just sell options like crazy, which is kind of what we have right now. That was, I'm going to say, 2005, 2006. So it's really been a decade since we've seen this kind of volatility. Long time. But if you go back almost 3 decades, like me, you have probably seen something at least one time before. So that's why, the shorter term VIX trade probably puts would be, if you're looking for something a little pop, that could be it. At the same time, we'll spend some time in the chat trying to look at like all of the big stocks, Facebook, Google, Apple, the rest, just seeing where vol is, what's really the potential for them to move, and how much it's priced at. All right, and with that, I will see a lot of you in our chat room today. Don't forget we have our Saturday class for all Option Pit members. The link is already posted. Go to okay. Look at that. Truly 2006 all over again. What do you think, D? How good am I? I don't even read Zero Hedge. But I can tell you what happened in 2006, right? Right after that, we had an insane bull market because of the low rates. So be prepared, right? But if you go to our schedule for all Option Pit members, go to the monthly tab. Well, we know at 2008, but that was 2 years, right? If you bought juice in 2006 and waited for 2008, you went broke, right? Because you never got the pop. But it didn't end well. I know. Well, everybody's calling for it, but that's 2 years later. Don't forget. You got to survive in the meantime. Here's our link here for all Option Pit members. Here's our schedule for today. And with that, I will see all of you, or many of you, in our chat room in a little bit. Bye-bye.